All right, so you're thinking about getting into commodities in 2025. We've got this awesome report from buystocks.ai. First up, gold, always a popular choice, especially when things are uncertain.
Yeah, and the report predicts gold could hit $3,000 an ounce.
That's pretty incredible. Why are they so bullish on gold?
There are a few reasons, actually. Central banks all over the world are buying gold like crazy, which obviously increases demand. And there's a lot of geopolitical tension out there, which always makes people nervous, so they turn to gold because it tends to hold its value when things get rocky. Plus, the report says interest rates could be going down, and that usually makes gold even more appealing.
So if someone wants to invest in gold, what's the best way to go about it?
There are a bunch of ways to get into gold, but one of the easiest is through gold ETFs, like the Invesco Physical Gold GBP Hedged ETC. It's an easy way to get exposure to gold without having to buy gold bars and store them somewhere.
Moving on to copper.
Yeah, copper is essential these days with all the electric vehicles and renewable energy infrastructure being built.
Can copper production keep up with this massive demand?
That's the million-dollar question, and the report highlights that there are some challenges. Production just can't keep pace with the demand, and that usually means one thing: higher prices.
Sounds like copper could be a good bet for 2025.
And if you're looking for a way to invest in copper, you might want to look into the iShares S&P GSCI Commodity Index Trust. It's also known as GSG. It's a way to get exposure to a whole bunch of commodities, not just copper.
Got it. Now, this next commodity might surprise some people, crude oil. With everyone talking about clean energy, I thought oil was on its way out.
The transition to clean energy is definitely happening, but it's going to take a while. And in the meantime, the world still needs oil.
So oil isn't going anywhere anytime soon.
Not really. And the demand is actually pretty strong, especially in developing countries. Plus OPEC, plus the big oil-producing countries, they have a lot of control over the supply, and that can impact prices too.
Yeah, OPEC Plus is a powerful player for sure. So how can someone invest in oil without getting into the whole futures contracts thing, which can be pretty complicated?
There's an ETF for that too. The Wisdom Tree WTI Crude Oil ETC. It tracks the price of crude oil without having to deal with futures directly.
Easy peasy. All right, next up, silver, another popular precious metal. What's the outlook for silver?
Silver's interesting because it has this double role. It's a precious metal like gold, but it's also used in a ton of industrial applications, things like solar panels, electronics, and even electric vehicles.
So it's got that investor appeal and the industrial demand too.
Exactly. And that double demand is probably going to keep prices up in 2025.
So if you're thinking about silver, the Wisdom Tree Fiscal Silver ETC is worth checking out. It lets you invest in silver without having to actually buy and store the physical metal.
Yeah, that's a much easier way to do it.
Now this next commodity, I have to admit I didn't see coming, cocoa. Chocolate's delicious, but I never thought about it as an investment opportunity.
Cocoa was actually the top performing commodity in 2024. It went up a whopping 185%.
Why such a huge jump?
The demand for chocolate is pretty strong worldwide, but the real issue is supply. There have been some serious supply shortages, especially in West Africa, where a lot of cocoa is grown. And climate change is definitely having an impact too. It's messing with the crops, and that's driving prices up.
So it's a classic case of high demand and low supply, pushing prices through the roof.
Exactly. If you want to get in on the cocoa craze, you could check out the Wisdom Tree Cocoa ETC.
Okay, cocoa ETC noted. Now let's talk about lithium, the battery metal. It's everywhere these days.
Yeah, lithium is definitely having a moment. It's essential for batteries, and with the EV revolution going strong, it's no surprise that it's a hot commodity.
But the report mentioned that lithium had a bit of a roller coaster year in 2024. What happened there?
Yeah, there were some concerns about oversupply in the market, which led to some pretty big price swings.
So it wasn't just a straight climb upwards for lithium.
Not exactly. But even with the volatility, the long-term outlook for lithium is still very positive. The demand for batteries isn't going away anytime soon.
It's just getting started. So if you're interested in lithium, what's a good way to invest?
There's an ETF for that too, the Global X Lithium and Battery Tech ETF. It's also known as LIT, and it tracks companies involved in lithium mining and battery technology.
Okay, LIT it is. Now let's move on to natural gas. I know there's a big push for clean energy, so I'm a little surprised to see natural gas on the list.
Well, natural gas is often seen as a bridge fuel between fossil fuels and renewables. It's cleaner than coal, and it can be a good backup for solar and wind power, which can be a little unreliable depending on the weather.
So it's not just about ditching all fossil fuels overnight. It's about finding a more sustainable path forward.
Yeah, exactly. And the report actually predicts a good year for natural gas in 2025. There have been some supply disruptions, which always push prices up, and the demand is increasing as countries look for cleaner alternatives to coal.
So natural gas is benefiting from both supply and demand factors.
Pretty much. If you're interested in natural gas, the United States Natural Gas Fund, or UNG, is a good way to invest.
All right, last but not least, wheat. It's one of those essential agricultural commodities that's always in demand.
Yeah, people got to eat, right? And wheat is a staple food for billions of people around the world. The report predicts strong demand for wheat in 2025, especially as the population continues to grow.
But what about the supply side?
That's where things get a little tricky. Climate change is a big concern because it's affecting harvests in some key wheat-producing regions. And then you've got geopolitical risks and trade disruptions, which can also impact supply.
So it's a combination of factors that could push wheat prices up.
Exactly. And if you want to invest in wheat or other agricultural commodities, you could look into the Invesco DB Agriculture ETF. All right, so let's break down some of the ways you can actually get involved in the commodities market.
The report starts off by mentioning exchange-traded commodities, or ETCs.
They're a pretty simple way to track the price of a specific commodity. It's like you're buying a little piece of that commodity without actually having to deal with owning and storing the physical stuff.
For example, if I think copper prices are going up, I could buy an ETC that tracks copper.
Exactly. And then if the price of copper goes up, the value of your ETC goes up too. It's a lot easier than trying to store a bunch of copper pipes in your garage.
Yeah, no thanks. And we talked about some ETCs earlier for gold, silver, oil, cocoa even.
There are ETCs out there for a wide range of commodities.
Cool. So what's the next strategy?
Next up, we've got commodity ETFs.
ETFs, how are those different from ETCs?
With a commodity ETF, you're not actually investing in the commodity itself. You're investing in the companies that produce or process that commodity.
So instead of buying copper, I'd be buying shares in a copper mining company.
Exactly. It's like investing in the picks and shovels during a gold rush. You're betting on the companies that are essential to bringing that commodity to market.
Interesting. So with ETFs, you're getting exposure to the whole supply chain, not just the raw material.
Yep. And that can actually provide some diversification because you're spreading your risk across multiple companies.
Diversification is always good. Now, what about futures contracts? I feel like those are a bit more advanced.
Yeah, futures contracts are definitely not for beginners.
Can you explain how they work in simple terms?
Sure. Basically, a futures contract is an agreement to buy or sell a certain amount of a commodity at a specific price on a specific date in the future.
So you're basically locking in a price today for something you might buy or sell later on. I can see how that could be profitable if you guess right.
Yeah, if your prediction is right, you can make a lot of money. But if you're wrong, you can lose a lot too. It's a high risk, high reward kind of thing.
Definitely not for the faint of heart. So maybe best left to the professionals.
Probably a good idea. So that brings us to our last strategy, investing in physical commodities.
Now, this is what I think of when I imagine commodity investing. Owning actual gold bars, barrels of oil, sacks of coffee beans.
Yeah, it's the most direct way to invest in commodities. You literally own the asset.
It's got to feel good to hold a gold bar in your hand, right? It's like a tangible piece of security.
I can see the appeal, but you have to think about the practical side of things too.
Like what?
Storage, for one. If you're buying gold, you need a safe place to keep it. And then there's insurance and transportation costs if you ever want to sell it. But for some people, the peace of mind of owning the physical asset is worth it.
And to all our listeners out there, thanks for tuning in to The Deep Dive. We'll catch you next time.